Afternoon. I'd like to call this subcommittee on Housing, Transportation, and Community Development Committee to order. I want to thank you, as always, Senator Lummis, to you and your staff for working with us on this hearing, which will focus on community development financial institutions, or CDFIs, and how specifically CDFIs can promote housing development and economic opportunity. I think that both Senator Lummis and I believe that everyone in this country should have the freedom and the opportunity to build the lives that they want, that this is the American dream. And an essential building block for fulfilling this dream is that people have access to capital and lending and resources so that they can buy a home or build a small business or get an education. And we also know that not everyone has equal access to capital and financial services, and that this inequity drives big gaps or disparities in opportunity and wealth, which is what we see in our country. Communities of color and indigenous people and rural areas often don't have the same access to capital, and that ends up holding everybody back. According to the Federal Reserve, a typical Black family's net worth is only 15% of a typical white family. And on average, the net worth of a Hispanic family is about 19% of a white family's net worth. And there's less data available on the net worth of Native families, but a recent analysis by the Minneapolis Fed found that in one sample, a median Native family had a net worth 32 times lower than that of a median white family. That analysis also found that home equity is a much smaller portion of a Native family's wealth, in part because of the difficulties that Native families face in getting mortgages. If you think of rural communities, the Pew Research Center data shows that rural counties are about 50% more likely than urban counties to have high rates of concentrated poverty, and twice the rate of concentrated poverty compared to suburban counties. So it is clear that we have a lot of work to do to address these disparities, these challenges. So today, I'm very excited. We have the opportunity to hear how CDFIs are a powerful tool to expand access to capital and financial services to people in places that have been too often left out of opportunity. CDFIs work, and they have long had bipartisan support. When the CDFI Fund, the federal agency that oversees CDFI programs, was established in 1994, there were about 80 CDFIs. Today, there are more than 1,000 deploying innovative strategies for getting capital and resources to underserved communities in all parts of the country. I've seen the power of this work in my community, helping small businesses and building wealth. And we know that federal investments in CDFIs yield strong results because they leverage private capital. By one estimate, CDFIs generate $10 in new investment on the private side for every $1 in federal support. So today, we have an opportunity to hear about this work, what's working, what can be improved, from three impressive CDFI leaders. CDFIs are bringing, and your organizations are bringing jobs and economic opportunity to communities and helping small businesses get started. CDFIs have adapted to meet the needs of very different communities, showing that there's a lot of flexibility in this model. And I'm also hearing a lot of feedback on, I'm also interested in hearing feedback on the bipartisan bills that are out there to support CDFIs that my colleagues and I have been working on. Senator Rounds, Senator Lummis, and I have a bill to update the CDFI bond guarantee program so that it works better for smaller CDFIs that are making low-interest, long-term sources of capital available. I'm also working with Senator Rounds and Senator Lummis on a bill to make permanent a successful pilot program that supports mortgage lending on tribal trust lands. And I would note that Senator Warner and Senator Haggerty have a bill to support a secondary market for CDFI loans, and several colleagues have bipartisan bills that fall within the Finance Committee's jurisdiction to support CDFIs. So I'm quite sure that this will be an interesting and productive hearing. I look forward to hearing from all of you and then continuing our work to support CDFIs and address the historic inequities that we see in our economic system that I believe can be remedied in part by your work. So thank you so much, and Senator Lummis, you're recognized.
Well, thank you. I've been looking forward to this hearing. CDFIs are such an important part of addressing the borrower's needs in this country, and I'm delighted to have some experts here today. Since I don't have much of a voice today, I'm going to submit my opening statement for the record, but I am going to just highlight a couple paragraphs that I had hoped to bring to people's attention. Of course, CDFIs were set up to meet the needs of borrowers that are not well served by traditional banking institutions. And in exchange for doing this essential work, CDFIs are given access to subsidized funds and grant money supplemented with private funds. So I'm a little disheartened that the Treasury Department, in managing the CDFI fund, has not given CDFIs the certainty and flexibility they need to do their work. As Treasury revises the certification process, many stakeholders have raised concerns about the proposed application and the delays in finalizing the application and the transparency of the process. We need robust standards to preserve and protect the CDFI designation. So I call on Treasury and the CDFI fund to run a transparent process and truly take into account the feedback you've received through the public comment process. I also want to comment about CDFIs needing access to funding, ideally stable long-term funding. I know this is challenging, so I'd like to hear from the witnesses today how we can best expand the public-private partnership that has fueled CDFI lending and increased access to capital. One source has been advances from the Federal Home Loan Banks for those CDFIs that are members of the system. However, the system has very, very few native CDFI members, so I'd like to see what we can do to support access to the system for native CDFIs. The Federal Home Loan Bank system is really taking a look-see at its mission and its efforts as they look at their 100th anniversary. And I want to acknowledge that as part of that initiative, FHFA held a roundtable to gather feedback specific to the tribe's needs, and I want to thank the Native leaders that participated. I hope the report includes careful consideration of the feedback from this session and others. With that, I want to thank our witnesses so much, and I look forward to being here today. And thank you, Madam Chairman. You've always been so gracious about including topics that are really valuable, both to urban and rural communities and tribal communities. And we've had a lot of interest expressed by our colleagues on this committee. There's a vote that's currently open, which is why some of them have not arrived yet, but we expect that you'll have questions from other members of the committee. And we're, again, very delighted that we're welcome and willing to come today and help us learn more about this topic. So with that, Madam Chairman, I yield back. Thank you.
Thank you so much, Senator Lummis. And welcome again to our three witnesses who are with us today. I'll introduce each of you, and then we'll start with Ms. Nelmark and go down the line. Julia Nelmark is President and CEO of Midwest Minnesota Community Development Corporation, based in Detroit Lakes, Minnesota, which is sort of up in the northwest central part of the state. Ms. Nelmark has been in her role since 2018, and she has led the deployment of $544 million in new markets tax credit financing. In addition to leading the MMCDC, she also leads a native CDFI subsidiary, the White Earth Investment Initiative. Yesterday, USDA announced that they would be one of 8 Native CDFIs receiving funding through the Native American Relending Demonstration Program, a program which I think we'll hear more about today. Julia has a CPA certification and holds a master's in management from Northwestern University's Kellogg School of Business. Renee Dossman is President and CEO of Neighborhood Development Corporation, or Center, in St. Paul, Minnesota. NDC focuses on helping small businesses get off the ground and supporting their growth. It provides entrepreneurs a whole suite of services, including lending and training, real estate services, and assistance with management consulting and accounting and marketing. Ms. Dossman joined NDC in 2019 with over 18 years of experience leading teams in merchandising, product development, and design for Target. She is a member of the African American Alliance of CDFI CEOs, lots of alphabet there, and has earned her Bachelor of Science degree in Management and Accounting from the College of St. Scholastica. And Crystal Cornelius is with us today. Crystal is president and CEO of Awista Corporation, a national native CDFI based in Longmont, Colorado. Ms. Cornelius has 23 years of experience working in the Native economic development field. She is an enrolled member of the Oneida Nation of Wisconsin and a member of the Turtle Mountain Band of Chippewa Indians in North Dakota. We will begin with Ms. Nelmark. Thank you so much.
Good afternoon.
I think you know this, but I'll just reinforce that you each will have 5 minutes for your opening statements. There's a clock in front of you to help you keep track of time, and your full written statement will be made a part of the record. Pardon me for interrupting. You can...
Thank you. Good afternoon, Madam Chairwoman, Ranking Member Lummis, and members of the committee. As stated, I'm Julia Nelmark, President and CEO of Midwest Minnesota Community Development Corporation, a CDFI and NeighborWorks America member in rural Minnesota, and CEO of our native CDFI subsidiary, the White Earth Investment Initiative. CDFI fund programs help us promote community revitalization, business development, affordable housing, and job creation in economically distressed communities. During the pandemic, CDFIs utilized $1.25 billion in our RP funds to make investments and loans totaling $14.8 billion. In Minnesota, 31 CDFIs serviced $851 million of SBA PPP loans for Minnesota businesses and nonprofits, preserving some 88,000 jobs. Investments in CDFIs offer an excellent return on our taxpayer investment. CDFIs leverage federal dollars on average 10 to 1 to facilitate growth in businesses, jobs, community tax base, and more. In FY22, CDFI awardees made over 1.4 million loans totaling more than $53 billion and financed over 65,000 affordable housing units. As individuals become more self-sufficient, their reliance on social welfare programs decreases, so these decrease costs in the long run. CDFIs are innovative and flexible. We have a long track record of layering varied funding sources, finding multiple ways to use new tools. As an industry, we are collaborating in a few national groups to access EPA's Greenhouse Gas Reduction Fund. The proposed CDFI tax credit and Scaling Community Lenders Act are also promising options to add essential liquidity. A growing segment of the CDFI industry are native CDFIs, serving largely rural reservations, villages, and homelands. With many facing high rates of poverty, access to capital and other financial resources is especially difficult, giving rise to predatory lending, now more accessible on the internet. In addressing this, we try to prevent issues like this small business customer struggling with cash flow due to COVID impacts who took out several internet loans, then came to us asking for a refinance. But their loan docs require them to pay nearly all of the full service fee, equating to nearly 50% interest. They did not understand what they signed and have very little recourse to change it. A few key issues lead to unique challenges facing rural CDFIs and their communities. One is collateral valuation. A rural property is worth perhaps 20% less than in an urban area. Put that property on trust land and it drops another 20 to 25%. A tribal business we helped finance before COVID cost roughly $12 million to build, but appraised new at about $6.5 million. A bank could not finance that fully, and the tribe could not fill the entire gap. The project used additional land for collateral and via 3 CDFIs, accessed tax credits, a federal loan guarantee, and special purpose sources. It's now doing well, but only because of those multiple layers of funding. Title issues and leasehold improvement mortgages were additional issues not uncommon with native projects. Many banks do not understand and avoid the complex legal status of trust land. A second challenge in rural work is census data. Large rural census tracts span multiple towns or entire counties and average out or mask pockets of poverty, often making them ineligible for funding sources we use. Recent census changes for 2020 further narrowed data available in many tribal areas. Minor wording changes to allow for the use of census data at the town or block group level, or to allow the use of locally collected data sources would greatly improve access in those areas. A third challenge relates to low-income housing tax credits, our number one tool for development of affordable rental housing nationwide. The Bipartisan Affordable Housing Credit Improvement Act would increase the total available, strengthen the program, and help address challenges in rural and tribal areas. I could list a number of improvements we would strongly support to facilitate greater success in our work, but I'll focus on just a few. Increased annual appropriations for CDFIs and New Markets Tax Credit permanency with specific rural and Native allocations. The CDFI Bond Guarantee Improvement Act to make these less expensive and more accessible, and housing support through both LIHTC improvements and continued support for NeighborWorks America. I greatly appreciate your long-term continuing support for CDFIs. Our impact numbers show how helpful you've been. We were excited at the formation of the CDFI caucus and the increased efforts you're bringing to this work. Thank you for the opportunity to discuss CDFIs with you today.
Thank you very much. Ms. Dossman, we'll go to you.
Thank you, Chair Smith and Ranking Member Lumbus. My name is Renee Dossman, and I am the President and CEO of the Neighborhood Development Center, NDC. NDC is an entrepreneur-focused CDFI based in St. Paul, Minnesota. For over 30 years, NDC has created a model of excellence for serving BIPOC small businesses located in low-income neighborhoods. I am a proud member of the Build From Within Alliance, a group of organizations from 50 communities replicating the NDC model. Also a member of the African American Alliance of CDFI CEOs, the Minnesota CDFI Coalition, and the Opportunity Finance Network. Our NDC model features 4 pillars of wraparound support to provide access to opportunity and financing to populations who are unbanked. These pillars are training, small business financing through loans, technical assistance, and real estate incubators. NDC will be building a new innovation incubator focused on second stage businesses in 2024. Thanks to Senators Smith and Klobuchar for their help securing a $1 million grant for this project on Lake in Chicago, which was destroyed during the murder of George Floyd. During the pandemic, CDFIs like NDC were trusted local intermediaries for federal and state funds. While many were left behind in the PPP process, we were able to ensure 90% of our PPP loan amounts went to BIPOC-owned businesses. NDC delivered $20 million in emergency loans and grants, which is 7 times more than we did in a typical year. This is the power of CDFIs. In the state of Minnesota, we were ground zero to communities across the country responding to racial and economic injustices. According to the Federal Reserve, the median household wealth for white families is $211,000. In contrast, Latinx families is $18,000. And for Black families, 0. We can and must do better. This is why CDFIs matter. Here's what 30 years of NDC has taught us and what we know in our bones. BIPOC small businesses in low-income communities require unique and innovative approaches to opportunity. In the last 3 years, NDC has created initiatives to address entrepreneurs' mental wellness, double down on our support for Black and Latino women, launch credit builder loans and education, and are assisting entrepreneurs to buy their own commercial real estate as another pathway to wealth. And we don't stop there. The state of Minnesota has tagged NDC to deploy $79 million in small business grants. I want to thank Senator Smith and other senators who signed on to support an appropriation of $341 million to the CDFI fund in fiscal year 24. That appropriation funds entire CDFI programs like the Native initiatives and New Market Tax Credits. Not to forget that during the pandemic, Rapid Response Program and Equitable Recovery Program were a lifeline to organizations like NDC and those we serve. Some recommendations I have. The CDFI fund is a competitive process. I would recommend base funding for all CDFIs and competitive grants for additional performance impacts and/or new innovative models. Accountability is important, but so is funding the full CDFI ecosystem. I also want to recommend the changes proposed by Senator Smith and Rounds for the CDFI Bond Guarantee Program Improvement Act. By reducing the minimum CDFI bond size from $100 million to $25 million, this bill will allow more CDFIs, especially smaller CDFIs, to access the fixed rate, long-term financing the program provides. CDFI bond financing could be used to finance additional commercial space and/or business incubators for local entrepreneurs. Lastly, I'd like to share the story of one of our entrepreneurs. Marla Smith opened Consciously Beautiful in 2018 in one of our small business incubators. She was a graduate of our training program, a recipient of technical assistance, and a loan client. Business was good. Then 2020 hit. Salons were closed, and civil unrest happened in our neighborhood, and then life dealt Marla another blow. Her son lost his leg in a boating accident. This isn't a story of tragedy, but one of her rising like a phoenix. Marla, she did not quit. While staying with her son in the hospital, she shifted her business model. She is designing a curriculum and working with the Minnesota Department of Cosmetology to require anyone licensed to do hair to be trained in all hair types. Marla is the first in the nation to create this type of curriculum and do policy work alongside it. Today, Marla and her son are thriving. She has paid off her loan and recently graduated from NDC's Black and Latino Women Programming. Not only is Marla a mom and a business owner, she's a leader in our community. Thank you so much for allowing me this opportunity to testify. It is with deep gratitude to you all that I share my organization's work, and I welcome any questions. Thanks.
Thank you very much. Ms. Cornelius.
Good afternoon, Madam Chairwoman, Ranking Member Loomis, and members of the committee. I am Crystal Cornelius, President and CEO of the Owista Corporation and a NeighborWorks America affiliate in Colorado. And I thank you for the opportunity to appear before you to discuss how CDFIs promote housing and economic opportunity. And a formal greeting, Bonjour, Nina Nishna Beakwe, Miknakwa Jewish Gunagandonji, Mashkode Bejakiakwe Dijnikaj. Hello, and it is a great honor to meet with two very important, and important is more so a measure of gratitude and strength within women today. So really appreciate this opportunity. Owista Corporation is the longest-standing Native CDFI intermediary that works holistically with Native CDFIs, tribes, and Native nonprofits in their communities for over the last 24 years. Owista's long-standing mission has directly affected thousands of tribal members from our inception. Owista is typically the first and many times the only investor supporting Native CDFIs in their local target market demand. Our direct financing has facilitated direct job creation, small business development, and homeownership opportunities for the upward financial mobility of Native individuals and families across the United States, Alaska, and Hawaii. Most Native communities lack access to safe and affordable capital resources that are taken for granted in urban communities around the country, and many lack a thriving homeownership platform and private sector economy. The situation is more serious when it comes to mainstream financial institutions. According to the Native American Lending Study conducted by the CDFI Fund in 2001, 15% of Native communities are more than 100 miles from the nearest ATM or bank. 86% of Native communities lack a single financial institution within their borders. This report explicitly identifies Native communities as underserved by financial institutions and in need of specific strategies that increase the availability of financial service resources. The lack of financial institutions poses a fundamental problem in accessing basic financial services, but perhaps more seriously, it makes homeownership, business financing, and personal consumer lending products almost impossible to obtain. Analysis by the Native American Lending Study of investments in Native American and Native Hawaiian economies revealed a $44 billion gap of those in the United States economy. To address this need for strong and stable financial institutions, OWISTA's main goal is to help Native communities create, capitalize, and aid in the growth and sustainability of Native CDFIs. These organizations are community-based financing entities governed by representatives and boards that meet the need for accessible, affordable loans and other financial products that are often tied to intensive training and technical assistance in addition to capital resources. These institutions form a foundation to develop homeownership and private sector opportunities for their respective tribal communities and lead the emergence of a bustling homeownership and private sector economy for tribal members across the United States. The success of OWISTA's approach in the number of CDFIs and tribal nations we work with within our services is paramount. In 1999, there were 2 certified Native CDFIs. Today, we have over 66 and over 30 emerging that are meant to serve their respective tribal communities. When we look specifically at the landscape of tribal communities, and I think this was relayed by some of our committee members, especially in rural communities, tribal communities are still lacking major financial institutions coming and offering their products and services within our respective communities. And we also typically tend to be permeated by predatory lenders as the only source of finance. So when we look at the imperative nature of what CDFIs have done over the past 25 years, our institutions are the financial pillars of our economies, of our tribal communities. They are a light and beacon of hope, and what makes our organization so different is we provide the much needed development services that are culturally relevant, tied with the capital that's needed, not only for consumer lending products, building businesses, but we're also seeing a huge insurgence, which I find so exciting, in homeownership. More and more of our tribal members, after 20 years of our organizations operating in these measures, are credit ready. They're home buyer ready, and they do not want to have to leave their home, to leave their communities to find a better opportunity or to create assets. And we know homeownership is one of the building blocks to creating assets and generational wealth. We began lending in 2002 with an exceptional record. Today, OWISTA's direct financing has made an incredible impact within our communities. From our inception of lending to our Native CDFIs, we have created 16,652 jobs, 3,885 small businesses, and built 217 affordable housing units. When we look at the availability of capital, our loan clients this year, OWISTA has 42 Native CDFIs within our portfolio. Our clients have deployed $579 million. And that's leveraging individuals and people that can leverage money as well. $349 million in small business lending, $109 million in housing lending, and $79 million in consumer lending, $45 million in agricultural lending. I thank you so much for taking the time, listening, and really supporting how important Native CDFIs and CDFIs are across the country. When we look at what the American dream is supposed to encompass, and we look at communities that have been vulnerable or left behind or not have the opportunity to enter a financial mainstream, 1,100 CDFIs are changing the lives of individuals each and every day. They're creating tax bases. They're creating stability within families. They're creating long-term generational wealth, and more so, specifically within Native communities, we are creating community wealth. And when we see the dollar reverberate within our communities and the strength that that builds, that's what true change looks like. That's what true equality looks like, and that's what true equity looks like. So when we look at our industry, we look at what CDFIs specifically do, They are intrinsically, culturally tied to their communities. We live, work, and breathe in our communities. And at the same time, success is breeding success. When we see one business start within a community and another individual says, I can do the same thing. If they did it, why can't I? And we are seeing that as we see we have created over 16,000 jobs. And that's just of the 42 native CDFIs on our portfolio, and we have 66 and 30 more emerging. So in looking at what we're excited about, we need your continued support, your continued championship of the CDFI fund, and specifically within Native appropriations. We have seen Native appropriations pretty much at the same level at $21 million. That was perfect when we had 5, 10, 15 CDFIs. Now when we're getting to a juncture of 60 or over, the competitive nature of this program in and of itself, we're finding much smaller CDFIs are actually not getting funded because the more successful and impactful, and we're all impactable, but we need to make avenues and measures which we can increase the economic vitality of all communities. And obviously I'm speaking on behalf of Native communities, but each and every one of our communities deserve this, and you are champions. And for that,
Thank you very, very much. Thank you all for your testimony. We'll have a chance to hear from all of you during our questions, which we will now begin. And our first line of questioning will be coming from Senator Tester, who is joining us remotely. Welcome, Senator Tester. You have 5 minutes.
Thank you, Chairman Smith and Ranking Member Lummis, and thank you for your nicety, let's just put it that way, to allow me to go in your stead. Thank you to the folks who have testified. I'm going to ask Ms. Nelmark a question first. Ms. Nelmark, have you ever heard of Bozeman, Montana?
I have, yeah.
The answer is yes.
Okay, good. That's good. I was just in Bozeman on Friday, and I just visited with a number of businesses there. And housing is one of the highest growth areas in the country, and housing there reflects that. Housing prices are through the roof. Rental prices are through the roof. It's created a lot of problems, homeless population. It's also created an affordability issue for people. That combined with higher interest rates, their turnover in properties isn't happening because nobody wants to give up their 3% loan, and I don't blame them. The question for you is in a high growth area, it could be Bozeman, it could be somewhere else, but in a high growth area like that, can CDFIs play a role in housing, whether it's rental housing or ownership housing? And what is that role?
Thank you for that question. Yes, CDFIs can play a number of roles. We work in housing development, both multifamily and single family, property management for rental housing, and then financing for all types of housing, including manufactured housing, single family housing, et cetera.
Keep going. Sorry, keep going.
Specifically, I think the issues we've been dealing with is the large gap between rental housing and getting into for sale housing, home ownership. And we're looking for options such as manufactured housing to be able to bridge that gap, to be a stepping stone for people to start off and then work their way up towards what they would like to end up in as their home.
Okay, so a couple questions that revolve around that. Because when I met with these folks, I didn't have any really huge solutions for them that were game changers, because quite honestly, it's a big problem. Supply is a problem, and then the cost is a problem. How does a community get involved? Do they have to have a CDFI in that community to be able to make this work? Or do you guys work with businesses or banks, or how do you do it so that I could tell those businesses that I talk to, look, here's who you need to get a hold of. This is how you need to start working on supply from this angle.
You know, the Minneapolis Fed has recently released research indicating that adding housing nearly anywhere along the spectrum will assist in filling the gaps, because people who move into that housing will empty out housing somewhere else along the line, along the chain, and free up houses for others to move into. And so that can be filled by CDFIs at the affordable housing level and also through market rate developers at other housing levels.
Okay.
yeah.
From a standpoint of the policymakers that are on the rostrum today, the senators are in the room today. Is there more that Congress can do or the administration can do to break down barriers to allow CDFIs to do their work even better?
Yes. There's a whole list of things. Specifically for housing, to provide more base funding, as Ms. Dossman suggested, would be extremely helpful in planning and knowing where we can go to. Low-income housing tax credits is one of the by far the best tool we have to provide for affordable rental housing. And that is very difficult to get to access in rural areas in particular. The credits are in very short supply, and they tend to go to the urban areas more than anywhere else. And then the basis in rural and native areas is also lacking. So
Okay.
those would be a couple of areas to start with.
Okay, and then the last question, because we've only got 19 seconds left. $341 million was appropriated to CDFIs. How much is that leveraged? In other words, what is the real value of that 341 million?
It's roughly 10 times that on average.
Okay, thank you very much.
Thank you, Senator Tester. I'll now turn to Senator Lummis for her questions.
Thanks, Madam Chairman. Ms. Cornelius, first of all, thanks for your enthusiasm about CDFIs. It really showed. Do you have any feedback to Treasury on the CDFI fund's proposal to revise the certification application?
Yes, and forgive me that I went over. I did
Oh, it
get
was
too
fun.
excited,
It
and
was-
yes, I
your-
saw it was
your
on red. so-
Enthusiasm is infectious. Thank you.
There are specific, very critical changes to the certification process that could possibly be detrimental to CDFIs, native CDFIs, and how we continue to operate in our community. Specifically, one, by prohibiting interest-only mortgage loans with balloon payments, and mortgage loans with terms longer than 30 years. Under the proposed CDFI certification changes, CDFIs will now have to write mortgages that include no negative amortizations, interest-only payments, or balloon payments. When we look at a majority of the mortgages that are held within portfolios of native CDFIs, a majority of those are balloon payments. So if we're looked at how, number one, we're not able to access conventional means outside of Section 184 or USDA 502 programs, the mortgages that we're holding work for our communities. By implementing this change, we are going to see a huge decrease in homeownership across Native communities. Also, the predominance as a financing entity and restricting CDFI staff time to get it dedicated to developmental services. As individuals working within the CDFI industry in and of itself, part of CDFI certification is the marriage of development services in conjunction with financing activities. Some communities need more development services than others. So if we're to start looking at the CDFI and the CDFIs throughout the nation as more conventional lenders and not allowing development services to be imperative to creating stronger borrowers, we're also going to see minimized individuals that are coming through our doors. Development services are imperative, whether you're native, rural, or not, to really building the capacity and the financial mobility of Native communities.
Thank you. My next question, I'd love to hear from any of you that wishes to take that. What can we do to ensure CDFIs have better access to stable forms of capital? And I'm particularly interested in what you might have to say about Federal Home Loan Bank membership.
Federal Home Loan Bank membership hasn't been really accessible for all CDFIs for a number of reasons, But those who do access it are able to get to that financing with pledging of home mortgage assets. Those who don't do mortgage lending don't have those assets to pledge. And even more so, CDFIs make a lot of non-conforming mortgage loans, which are not pledgeable to the Federal Home Loan Bank.
Such as non-conforming in what ways?
Collateral on reservations, collateral or mortgage loans with a higher loan to value than prescribed. Those homes in certain areas that have a value gap from cost to construction.
Great. Thanks. That's very helpful.
Thank you, Senator Lummis. I think as well the bond bill, the CDFI bond guarantee program that we talked about, the fact that it could go from $100 million, which for NDC, we would have never looked at that. We couldn't have been able to use it. But to go to 25 million, now we can
Is that the right number?
collaborate.
Is 25 million the right number?
25 million works, because
Okay.
then we can collaborate and do, and even work together. It's more attainable. It's more accessible for us at that level. I think that gives us, and it gives us like fixed rate, longer term, because that's what we need is with these entrepreneurs that we support that now want to do this commercial development. If we think about our Developers of Color program that we're creating, the gap in financing is what's tripping everybody up. So to be able to provide long-term financing to them, patient capital is what we call it, is key. So really grateful for that.
Do you agree, Ms. Nilmark, that 25 million is the sweet spot?
It would be very helpful for some. And yes, to be able to collaborate, I think we could use that a lot more. I would also say that the cost, which leads to the higher interest rate, makes it not as useful for certain types of loans or many types of loans. And if there were some funding, with the bill proposing $10 million of funding to provide for the loan loss reserve, that would reduce the interest rate cost. We would have to access the CDFI bond funds, and it would make it help us to make more affordable loans to our customers.
Okay, thank you. And my time's up, but I'll have more questions in a minute. Thank you. Thank you, Madam Chairman.
Thank you so much, Senator Lummis. Senator Menendez.
Thank you, Madam Chair. Republicans in the House have spent the last few months debating draconian cuts to domestic programs that hardworking Americans rely on, including the CDFI fund. In July, the House Appropriations Committee passed a bill that cut funding for CDFIs by $45 million, a near 15% cut from fiscal year 2023. Can each of you briefly describe how these large cuts to the CDFI fund would impact the work you and other CDFIs do for disadvantaged communities?
Thank you, Senator. I would say just at a high level, to cut $45 million would cut nearly $500 million of community lending and investment that CDFIs do. Yes.
$500 million.
And the specifically to each of us, it would cut out a lot of our activity that we're able to do within our communities, and that can be devastating for some of those areas that we serve and some of the people.
Yeah, I completely agree. If you think about what we were able to do as a result of COVID and everything else with the additional funding that we were able to receive with those programs that I mentioned in my testimony with the rapid response, as well as the equitable recovery program, the additional funding that we received during that time made it easier for us to serve those that we need to serve. And cutting it, like I said, like not having a base for all CDFIs are not created equal. So not having a base, especially for our smaller CDFIs, it makes it really hard for us to get into the communities that we need to get into to provide the technical assistance and the training and the low interest loans that we provide. So if anything, during these times, especially now with interest rates and everything else, more funding would be needed.
And I would echo their comments as well. I think how it can affect generally the CDFI field, and we've heard this, is the ability to leverage funding. So when we look at what we're able to do with CDFI funds, leverage those funding with other long-term patient capital, we are going to be looking at a huge decrease in the amount of activity and loan volume in which we'll be able to provide to our respective clients.
Well, CDFIs have proven their effectiveness time and time again, which is why earlier this year, 46 bipartisan senators joined my letter to the Appropriations Committee requesting robust funding for the CDFI fund, and I hope we can continue that bipartisan support. The CDFI Bond Guarantee Program, which I helped create in the wake of the 2007 financial crisis, allows CDFIs to access long-term, low-cost capital to jumpstart economic growth and community development, all at no cost to the taxpayer. The program has supported over $1.3 billion in affordable financing for community facilities, nonprofits, commercial real estate, other development projects. Ms. Nelmark, can you explain in greater detail how the CDFI Bond Guarantee Program helps these types of projects come to life?
The CDFI Bond Guarantee Program provides, as you mentioned, long-term, lower-cost capital. So to access 30-year money, we cannot get that in the regular banking system. The cost of those funds to us is rather high to be useful for other than long-term investments such as housing, rental housing properties, for example. We would greatly appreciate the Bond Guarantee Program Improvement Act to decrease that cost. Even a $10 million investment can make that much more accessible to many more uses in community development.
Mm-hmm. And which is why I'm proud to be a co-sponsor of the Chair Ladies CDFI Bond Guarantee Program Improvement Act to further strengthen it. I think it can only be more powerful. Finally, Ms. Nelmark, can you talk about how CDFIs can help alleviate the lack of affordable housing supply in low-income communities?
CDFIs are working on many avenues to increase housing, both rental and for-sale single-family housing, and looking at pretty much any option we can come up with. Manufactured housing, factory-built housing, renovating existing homes, providing for unique types of construction or financing developers of unique types, such as the prefab walls and things along those lines. So we're working with others to help them help our communities.
Thank you. Thank you, Manager.
Thank you, Senator Menendez. Senator Fetterman.
Hi, thank you, everybody. Hi. I just wanted to open with any of you about the question. Do you believe that there is a homeless issue in rural county across America or Pennsylvania?
Yes, it's hidden, though, in northern areas very much so. There are a lot of people who couch surf, if you will, and they don't appear to be homeless because they have a place to live for the night. But it's very precarious, and they could be out on the streets any day.
Anyone else agree?
No, I would agree with that. I would say respective in Native communities, due to cultural mores, for lack of a better word, we more look at severe overcrowding of housing. We can have 16 individuals in a 2-bedroom house simply for the fact there is not enough housing. Individuals could be homeless, and that doesn't constitute within how we care for our community.
Yeah. A supermajority of counties in my state of Pennsylvania is rural. And I have heard again and again and again that there is a real housing crisis here in rural Pennsylvania. And I've always kind of thought about the problem and just what are the different kinds of options, right now as well, too. And I wanted to bring to you this idea of manufactured housing units, i.e., mobile homes. And I think that would be a very affordable kind of option. But is it fair to say that there's kind of a stigma attached to it, too, where it's kind of like trailers or worse things that I'm not going to, say out loud. But I think that's a shame, too, and it's really kind of strange to me, too, because there's been quite a time where tiny houses were all in the rays, and urbanists and others think that's just amazing. So why not about these kind of things too? And if we do have the kind of crisis of housing in rural counties, do you really, would you really support that? Expanding financing options for people that just want manufactured housing as well too, or that never really has a path to pursue because of the stigma or that kind of a thing.
People don't generally go looking for manufactured housing. And if we've been working on educating people, even our staff, to understand the difference between mobile homes and then post-76 and post-94 HUD compliant manufactured homes that are much more energy efficient and well built, and to think of them as a stepping stone to affordability. But they can also be improved with multi-sections, carports, garage or porches, things like that, to look very attractive and not look like a mobile home.
Yeah, I don't know. I mean, I think millions of Americans live in manufactured housing as well too, and there's nothing wrong with that. And I think that's really a very affordable kind of option for people as well too, and provides a roof over their head. And I think obviously that's not really as easily put in more of an urban area, but I think it's a shame that is it safe to say that it is that stigma for people. They're like, I don't want to live in a trailer or anything like that kind of a thing. Because I've actually visited, I've seen a lot of, mobile homes that are lovely. They're beautiful. I would have no problem living there as well.
Putting them into a co-op, a resident-owned community model, eases that stigma, increases the community spirit and desire to be a part of it when they've got ownership in the land on which their houses are located. And it helps them all become much more of a neighborhood rather than just living in something next to each other.
So is it a fair statement that people would rather have fewer people addressed with their housing, or having more actual traditional homes built as well too? I mean, it seems like it's really kind of a trade-off on that as well too, because I've heard for years and years and seen that there is a housing problem here across rural Pennsylvania. So thank you. Our community land trusts in Pennsylvania are doing amazing work to create long-term affordable housing options. But community land trusts struggle to find funding that moves quickly enough, so they lose out to private equity and market rate buyers. Have you seen these issues?
Yes, not just with land trusts, but with all CDFIs and nonprofits who would be buying those homes to rent affordably, and more so to maintain them, to keep the homes at a safe and desirable and quality status, so that the kids growing up there don't have to worry about a hole in their ceiling or leaking on their bed and things like that. But yes, to have that liquidity available to be able to jump on those right away, that's something we've been in discussions with North Country Foundation, for example, in Minnesota, to look to buy full mobile home parks all in one fell swoop to turn them into resident-owned communities.
Okay, and right on time, Mr. Chairwoman.
Thank you very much, Senator Fetterman. So first, I just want to say thank you so much for your testimony, and I'm not going to go back to this the CDFI bond guarantee program and the revisions, the reforms that Senator Rounds and Senator Lummis and I have proposing, because I think we've talked about that quite a bit. I just really appreciate the feedback on that, and as we move that legislation forward, I would really love to be able to continue to speak with all of you about that and make sure that we have it set up in the right way. Let me ask a question specifically about the Native CDFI relending pilot program. So this is the Department of Agriculture's relending pilot program to make mortgages on tribal trust lands. And we've had a chance to hear about how challenging that is, particularly if you don't have any experience. If you're an institution that does not have experience making mortgages on tribal trust land, it can be very difficult and very difficult to resolve. So I'm wondering, maybe both Ms. Cornelius and also Ms. Nelmark, if you could share your views on this program. What are some of the unique issues that arise when we're making home loans on tribal lands? And then I'll have a follow-up. So Ms. Cornelius, would you like to go first? And then get ready, Ms. Dossman, because I have a question for you next.
As we know, the complexities of tribal trust land and being able to mortgage or have mortgages within land has been created very many barriers for our tribal communities for generations upon generations. So I think with the relending program, this number one is very, very innovative, and it's looking to address an issue to really create home ownership within our communities in a measure that understands the complexities of trust land and allows for future mortgages. So all in all, I would say it's a wonderful program. It's beyond time that we had a pilot. And I'm also very excited to see as well, there's a coalesce of, I would say, government interest. For instance, Fannie Mae or Freddie Mac just put their Heritage One product out, loan product specifically for mortgages within tribal communities.
To start to get at some of these barriers, right?
Yes,
right.
yes.
And I think it seems as if this pilot has been quite successful, and that's why we're hoping to expand it and excited to see some of the steps that the USDA has taken. Ms. Nelmark, would you like to add to that?
Yes, it is very helpful when we're able to use those. Some of the tribes don't have the codes in their regulations that allow for federal guarantees and federal direct loans to be used there. So if some leeway in terms of the flexibility with those regulations that are required to be able to use those on the reservations, that could be very helpful. And I think there is already some sample codes out there for tribes to use to consider, but it's their option to implement those rules.
Great, thank you. Thank you. Ms. Dossman, I want to just sort of dive in a little bit on some of the work that you've been doing at the Neighborhood Development Center around Black entrepreneurship. And I have to say, as you know, I'm very familiar with your work, and your colleague Mike Tamale has been a longtime friend and ally of mine. And I think that it is sometimes difficult for people to understand, like, what are these barriers, and how specifically does an organization like Neighborhood Development Center break down those barriers? So that you're wanting to start a small business, for example. Just explain a little bit about what those barriers are and how you break them down. Absolutely. At a place like Global Market or other places that you are involved in.
Absolutely, thank you, Senator Smith. We actually at NDC we looked at our data. And we noticed, just specifically for Black and Latino women, we noticed that they were not, they start in our training programs, they might not finish, they definitely might not go on to get technical assistance and wouldn't get a loan. And so we got curious about what was happening. Instead of making up stories, we did research and we talked to them. And we found out that it was a lack of support. It was a lack of them being able to build community amongst themselves, them being able to get just some more training and support. So we started a program called BLOCK, which is Black Latina Opportunity to Connect. And we started it, and we didn't have funding at first, and then we had people come along with us. We were now into our second cohort, and they get focused, dedicated training and resources. And if we think about it, it's not that, like if you think about Marla, she's a graduate of Block, and it's not that these entrepreneurs don't want to do and that they don't care or any of that stuff. It's just giving them access to the opportunity.
Right. And when you talk about development services, that's what you're getting at?
Yeah, like from the standpoint of giving them what we call technical assistance.
Right.
So for these entrepreneurs, they have a coach and they have a business development coach. And then they can work with each other because it's really important for them to be able to build community. And so that's what we found. And by doing that, then now they're completing their business plans.
They've got support.
They have support. They're completing their business plans. They're going forward with the loan to
And
get
access
the
to
loan.
capital.
The access to capital, yeah. And so, and then it just works. And now they're together in this. And so we've seen great success with the first round, and now we've started a second.
I had a chance to be on a panel discussing some of the opportunities around building black wealth, and there were two really incredible entrepreneurs from the Twin Cities there. And one of the things that the woman entrepreneur talked about specifically was just sort of the challenges of trying to get access to capital, and going to a bank, and the bank looks at her record and says, you would be, I don't know, what was the term you used, Ms. Nelmark? I don't know, not non-compliant, but
Non-traditional.
And but once you break that down, she now owns several buildings. She has a successful business.
Yes.
She is really able to build wealth for her family, and it's a great example, I think, of what you're talking about.
I agree, and it's that access, right? It's that access and ability to obtain the capital, and that's why CDFIs are so important, because the work that we do, it's not about your credit score, and it's not about how much collateral you're bringing to the table. It's truly about your commitment to the community, and that's what makes the difference. We believe in these entrepreneurs. We believe in their spirit and their drive, and so just to know that someone's there and walking along beside you and can get you what you need to do what you need to do.
Right. And you're not waiting for them to fail. You're there to help make sure that they succeed.
All the way.
Thank you. Senator Britt, thank you so much.
Oh, thank you so much, Chairman Smith, and thank you for your line of questioning. As the President and CEO of the Business Council of Alabama, this was one of the areas that we worked so diligently on. And so thank you for answering that so directly. Obviously, access to capital and making sure that the building blocks for success for people who want to start their own business, who want to be entrepreneurs, are there. And so I commend you for your continued work on that. I continue to be a strong advocate for our country's banking system, which gives so many hardworking families access to their American dream. From the largest banks, regional, down to the smallest local community banks and credit unions. Financial institutions of all sizes provide varied missions and services to their individual customers, their members, their communities. And CDFIs certainly play an important and critical role in this banking ecosystem. Thanks to the strength and efforts of our banking industry in Alabama, the number of unbanked and underbanked individuals in the state has decreased over the years. That being said, given the makeup of my state, 55 out of 67 of our counties are considered rural, and many Alabamians still lack access to typical financial services. CDFIs provide a host of services and product lines that not only help reach these underserved individuals, but also reinvest back into our local communities, expanding economic opportunity for all Alabamians and Americans. Current economic conditions and many of the overburdensome regulations we've seen over the last 2 years have hindered customers and small businesses' ability to access credit. But CDFIs, certified community banks and credit unions, have continued to do their part in offering affordable products that promote financial inclusion and asset building and expand access to our great capital markets. That's why Congress has funded grant programs and enacted tax credits specifically for CDFIs. For instance, the United Bank in Atmore, Alabama, recently received a new markets tax credit allocation and a Capital Magnet Fund award from the CDFI Fund. We are very proud of this. They will use these federal investments to continue to bring new jobs to Alabama, improve rural healthcare access, and promote more affordable housing. In addition to federal investments, we need to ensure that we are promoting policies that also allow these institutions to continue to attract private capital as well. My question is, can you just tell us some of the important things that we need to take into consideration to ensure that CDFIs continue to have access to private capital? And we'll start with you, Mrs. Cornelius, and work our way down.
I think one of the things that I'm most excited about for our Native communities are the proposed CRA changes.
Okay.
So when we look historically, there's only been one CRA investment within Native CDFIs or within our realm. So in looking at what that can be to have equity in the partnerships from banks, typically what we're finding is we're outside of everyone's footprint. So if we're outside of a foundation footprint as a rural organization, outside of larger banking institutions. So with that access, that's a whole new stream of capital that's really exciting. And I also think as we start working, we've been incredibly successful with social investors, social capital, and really bringing corporate partnerships along. I think is going to be intrinsic in how we web together all of our respective programs to really benefit communities to the best of our ability and leverage our opportunities and leverage our programs with each other.
Be able to scale that up.
Yes.
Absolutely.
And
Yes, please.
Senator Britt, I think it would be helpful if we could have base funding for all CDFIs. All CDFIs are not created equal. It's an extremely competitive process. And so the ability to know as you're going about doing your strategic planning and you're doing your budget that you have this money and that you don't have to do the long, lengthy applications and things that you have to go through, that if it was in your base, it would make it a lot easier for us to do the work that we need to do unencumbered.
Okay.
Thank you. Similar to the prior comments in terms of getting to predictable funding from the CDFI fund, in addition to base funding, something of an on-ramp of perhaps 3 to 5 years for new and emerging or smaller CDFIs to access funding before joining the broader pool would be very helpful. The competitiveness has created a barrier to entry for those organizations who haven't already been in it. And even in the New Markets Tax Credit program, the successful applicants are within 4 or 5 points of the maximum. So if someone answers a certain bonus question no and loses those 5 points, they're out of the running automatically. So some of those, a few different ways to make it more predictable funding would be most helpful.
Okay. Madam Chair, do you mind if I ask one more question?
You have the latitude. Go ahead.
Okay, thank you very much. So in your experience, as we look at this, which federal programming has been the most successful in providing assistance to CDFIs so that they can reinvest in our community? And on that same note, if you don't think of that right off the bat, is there an existing gap or shortfall that we really need to take a look at and address? This is for everybody, if she'll let me.
Sure. Thank you, Senator Britt. One of the gaps that I keep seeing is when we think about these, we talked about the wealth gap and the wealth inequities, and one of the pathways for that is for entrepreneurs to own their own commercial real estate.
Okay.
And there is still such a gap for entrepreneurs to get the financing that they need to do that. And we have some programs in Minnesota that we're trying, but that gap, that 5% or 10% that the entrepreneurs that we support, the low to lower income entrepreneurs to come up with, is really difficult for them to achieve. I'd also say the ability to get new market tax credits. I am really grateful for Julia and her team because they have provided our CDFI with funding for us to be able to do real estate loans because we didn't have the amounts that we needed. And so how do we get more capital to more of these CDFIs that are doing the work so that we can get further and deeper into those communities?
Thank you. Ms. Delmark, do you, or Ms. Cornelius, either one?
I would like to echo new market tax credits are incredibly important to the development of Native communities. And fortunately, the CDFI fund has really looked at the on-ramping for what that looks like for Native CDFIs. So that's incredibly important. And I believe our partnerships, when you're talking about federal programs that are beneficial, we work hand in hand quite a bit with USDA, and a lot of the programs that they have really complement a lot of our services and or lending initiatives which help propel our further development in these areas.
Thank you so much.
I would add, in addition to the others, again, that predictable capital is most important. And NeighborWorks America, for those who are fortunate enough to be members of it, provides some grant funding every year to members. And it's spread across capital and operating. And it is some of the most flexible and useful capital we've been able to access in recent years. And so things along those lines, supporting NeighborWorks America and increasing their appropriation would be helpful, as well as similar funding to that.
Well, this is so critically important and appreciate y'all being here. And Madam Ranking Member, thank you for your indulgence on that. Thank you.
Thank you. I am going to, the chairman has gone to vote. As I understand it, there are no new Democrat attendees. I believe that we're about to conclude as well. I have a couple more questions, and then I'm going to ask each of you to conclude by responding to this question. Is there anything you wish you would have been asked and weren't, and how would you respond? But before you respond to that question, I have a couple extra questions. Ms. Nelmark, your testimony talked about the gap between the financing needs of a project and its appraised value. It's a problem that plagues a lot of affordable housing projects. Can you talk about the need to think creatively about financing the types of projects you work on and how CDFIs bring expertise?
That's a great question. Thank you, Senator. We've been in building single-family homes in rural Minnesota. We have seen value gaps with new construction to appraised value of $50,000 to $80,000 per home. And we've been fortunate enough to access some funding at the state level, but that gives us funding for about 2 homes at a time per community. So it doesn't give us the volume that is needed to really address the issue on a broad basis. And so we've worked on additional sources to try to fund that. New Markets tax credits is being used by a handful of organizations to finance the developers of the homes, and then the New Markets equity is used to reduce the cost by 20% or so of those homes with the affordable home developers.
Thank you. And Ms. Dossman, in what ways do small businesses benefit from partnering with CDFIs?
Thank you, Senator Lummis. It's vast. They receive training. If you think about NDC, you might be know how to do hair beautifully or know how to start a restaurant, but you don't really have a business plan and you don't know how to run a business.
Right.
So we provide you with a business plan, so you get training. And then it's like, once you start a business, that's great. But as you go along, you might need additional support. You might need help with accounting. That's the biggest thing for our entrepreneurs is their financial acumen. So you might need help with accounting. You might need help with marketing. And then obviously, as we've already talked about here today, the ability to access capital for a person that looks like me is difficult at best. And then you need a space to put your business. So now you've got this great business, you've got this great idea, and now you need a space. And so I think that CDFIs, you know what we do? We believe. We believe in the power and the ingenuity of entrepreneurs. And we don't stop at any point at NDC, it is complete wraparound services. And we are with those entrepreneurs every step of the way. And as a business owner myself, my husband and I have had a restaurant and other businesses and still have businesses. To have someone to walk along beside you and know that they will not give up on you no matter what is a beautiful thing.
Yeah. CDFIs are unique.
They are.
That's why I'm so pleased that so many of you have brought such positive remarks about them. Okay, so now we're down to the last question. and we will start with Ms. Cornelius. What do you wish you would have been asked, and what do you want to leave this hearing knowing that we've heard?
I think in looking at what could be asked, and obviously I'm representing Native communities, throughout the United States, Alaska, and Hawaii. What can we do more to support specifically those marginalized communities, programs that we can enhance availability and partnerships? Because again, working in such rural areas and having the opportunity to engage in larger programs, I think would be imperative. It's imperative. And when we look at the cultural differences, Hawaii is much different than Alaska. Then we're looking, so when you look at encompassing 574 federally recognized tribes, 60 state recognized tribes, 30 unrecognized tribes, I think we're doing such great work, but there's so much more to do.
Thank you. My daughter and my husband were both part of the for-profit subsidiary of the CDFI on the Wind River Reservation in Wyoming. It was called Painted Pony, and they took oral histories and converted them into storybooks, beautifully illustrated. And every fourth grader in Wyoming received a copy of these books, which were wonderful, both Shoshone and Arapaho stories. So I'm very familiar with what Native CDFIs are capable of, and it's truly impressive. So thank you for your work. Ms. Dossman.
I want to end, Senator Lummis, with gratitude. Gratitude for the ability to be here with you all today. If I think about the 1,500 CDFIs that I feel sitting around this table with you, I want to express that. And also, as I think about the Build From Within Alliance, our organization of 16 organizations across the country, from Anchorage to Texas, we're in this together. And it has been really heartwarming for me to understand and to get to know you better, and to know that we're not fighting this fight alone, and that we have a vehicle where we have concerns that we can have a conversation about it and come together. And I want you to know that I'm grateful for that. I also think that it's important to understand that when people found out I was testifying, all I received were, "Go get it, this is great, tell them our story," right? And it's a collaborative effort, and we're all in this together, and I am eternally grateful for this opportunity. Thank you.
Well, thank you so much for your testimony today. We're delighted to have you, and we want this to be a dialogue. So be sure when you look at the legislation that's drafted that you vet it and that you make suggestions to make the language clear and helpful. Ms. Nelmark.
Thank you, Senator. I too very much appreciate the opportunity to share our thoughts with you both and with the committee. We've been quite flexible. Rural CDFIs in particular work in so many different spaces. We haven't talked a great deal today about development services, such as homebuyer education, financial counseling, and free income tax preparation. And those services are some of the base supportive building blocks to help people get into their own homes, actually to prepare them financially for all kinds of life work, work and home. And that then brings us into how to help them get into affordable housing. We've talked about a few different solutions. I referenced low-income housing tax credits, and to have that more accessible throughout all areas of the state, especially rural areas, would be extremely helpful. And I guess I will mention a few statistics. According to a recent report by the Harvard Joint Center for Housing Studies, 41% of rural renters are cost burdened, meaning they pay more than 30% of their income for housing costs, and nearly half of rural households pay more than 50% of their income for housing. So with those kinds of costs, and a lot of homelessness is masked, as I mentioned earlier, we really need to figure out ways, and we're working on many ways, but to have some of the tools that are already there improved and strengthened and increased would be extremely helpful for us. Thank
I
you.
want to thank our witnesses, and Madam Chairman, welcome back. I believe we are out of questions, but the floor is yours.
Thank you. Thank you so much, Senator Lummis. I don't know if Senator Lummis explained to you, but we have votes going on, so she and I had to go back and forth. I'd like to just close by thanking all three of you for your excellent testimony. I see in what you have raised, painting a very good story about the important gap that CDFIs fill, particularly in rural communities and tribal communities and in underserved communities, both for small businesses as well as for people who are looking to build a stable family and grow wealth by owning their own homes. So I'm quite encouraged by what you've said. I think we've also gotten some good ideas for work that we can do in a bipartisan way to make sure that the federal government is setting up certification processes and other rules that actually work to make it easier for you to do your work rather than harder for you to do your work. Of course, all agreeing that we know the importance of accountability in this process. So thank you very much to all of you for being here today and for your testimony. For senators who wish to submit questions for the record, those questions are due 1 week from today, which will be Tuesday, October 24th. For our witnesses, you will have 45 days to respond to any questions for the record. Thank you again, and with this hearing is adjourned.